Hey guys, welcome back. I think the market is finally waking up. And the Q1 2026 earnings that we saw today from two old guard tech companies and a huge memory play overall just confirmed a massive structural shift. There's no question about it. We are moving from the training phase of AI into the inference and into the physical infrastructure phase. Today's video, we're going to break down the earnings prints from Texas Instruments, Intel, and SK Hynix, because they just actually gave us one of the loudest signals in the market, a buy signal overall for the memory and the storage sector. If you think that the rally that we've seen with Micron, Seagate, Western Digital, and others have put these stocks in a position of being overextended, the data we're going to look at tonight may suggest that we're in the early innings of this game. This isn't a bubble. This is a bottleneck shift. And today I'm going to show you data that proves that the big three memory players and the storage superstars that we have seen, they're not just riding a wave of demand. They are the new gatekeepers overall of the AI era. So let's jump in and talk about it. But if you haven't done it already, hit like, hit subscribe to the channel. Guys, I'm trying to get to 7,000 subscribers by the end of the month. We're sitting at about 6,500 right now. So if you find value in these videos, if you find value in this channel and you haven't subscribed yet, do it now. I want you to be part of this community. Just hit the subscribe button. Let's start off taking a look at Texas Instruments, the first earnings that actually hit late on Wednesday night overall, so leading into the market. And you may think Texas Instruments, Kevin, that is an old guard tech company, a boring company, something that's like watching paint dry. And normally I may agree, but today was not that case at all. This was a 19% single day gain in the stock. They had a massive day overall. And it was because of their earnings print on what they dropped over of the other day. It is a massive shocker to the market because we know that Texas Instruments is the plumbing of the tech world overall. Let's just jump in and take a look at some of those results that they shared. So you can see on your screen, this is the financial results. On the first paragraph, you can see Texas Instruments reported a first quarter revenue of $4.83 billion, a net income of $1.55 billion, and an earnings per share, I'll call it just $1.70, just under that. But I wanted to call out the first bullet point underneath below that the CEO provided. He said revenue has increased 9% sequentially and 19% over the same quarter year over year. And it was a massive growth led by industrial and data center demand. And I'll take that even further. These were some comments given in the Q&A with analysts. I highlighted the one piece on the screen for you where they mentioned that data center revenue grew by 90% year over year and 25% sequentially from last quarter. Massive signal to the market. Huge implications, not only for Texas Instruments, but also for many other companies in the market that I'll get to, the ones that'll profit from this earnings as well. Because you may have, like I said, Texas Instruments, many of us may look at it as a boring stock overall, but this revenue we just saw of $4.8 billion, 9% growth, and data center segment growing by 90% year over year is not boring at all to me. We know that Texas Instruments they don't make GPUs and CPUs. They actually make the power management integrated circuits and the thermal sensors. So you cannot run an HBM heavy AI cluster without massive power regulation. So Texas Instruments beat today. Their print that they just dropped tells us that the hyperscalers are not just buying chips. They are building out the power grids to support those chips as well. This is the analog awakening that the market needed to see. When power management orders rise like we saw, this means that the physical assembly of memory intensive AI server clusters is accelerating at a rate that the market hasn't priced in yet. An HBM heavy AI cluster consumes 3 times more power than a standard server overall. And guys, this is the 8th consecutive quarter for Texas Instruments to show growth. That's not boring either. And when they show that level of demand for data center and industrial growth, it creates a rally for other companies around them, competitive companies, but also companies in the space that support this build out overall as well and support the AI demand. And so there's a few stocks that I wanted to call out that I think will rally due to these earnings over the next few weeks. And the first one is Analog Devices. ADI is the ticker. They have a huge correlation with Texas Instruments, about a 74% correlation. They are the most direct competitor overall, and analysts have recently placed ADI on a positive catalyst watch because its industrial segment now accounts for about 50% of its total revenue. Microchip technology is another one that is poised to position or is poised to benefit from these revenues. Microchip technology is ticker is MCHP, or excuse me, yeah, MCHP. They have a huge correlation to it. Microchip technology is they're executing this 9-point plan for growth or recovery overall. And their recent revenue results show almost a 16% year over year growth. But the real catalyst for this company are their Gen 6 PCI switches, which are winning massive contracts in AI data centers along the power management chips that Texas Instruments just highlighted overall. And then the last stock I'll call out, because it's been such a big mover recently, and I've been bullish on it as well, is ON Semiconductor. Ticker is ON. Big correlation also with Texas Instruments, but they are the leader in silicon carbide, and power image sensors. So as Texas Instrument builds the power grids for AI servers, ON Semi provides the efficiency chips for the power stages. They recently had a 17% monthly gain in their stock. It's been moving, and it's still really well priced overall. If you're looking to get into a company that is positioned to move, I think the last time I saw it, it's under $100 in that mid 90s range overall. So take a look at ON Semi if you haven't already been looking at them. But let's move into the second earnings today, the second signal that I think is giving a huge buy for memory and storage overall, and that would be Intel's. So let's pull up Intel's, and we can talk about it as well. But let me pull over, and you can see Intel's financial highlights. 13.6 billion for the quarter, up 7% year over year. Gross margin at 41%. Earnings per share at 30 cents overall. But there's a few highlights I want to call out, especially here in the executive summary. If you look at the second bullet point, 6 consecutive quarter exceeding expectations, strong demand, disciplined execution, and improving factory output. Guys, it's not been that long ago that Intel was really negatively regarded because of their lack of discipline. So to see them get back on track, to see them be a huge part of the American comeback story with our foundry here, be a huge part of that overall, and see the discipline they're leading in the market, and that's showing up on their balance sheets, it's showing up in their quarterly results, is a bullish sign for me. And you can take a look at how that shows up quarter over quarter. So you can see on their margins, their operating margins improving. It's that white line across the bars here. If we move from fourth quarter of last year into first quarter, it went from about 38 to a 41. Revenue stayed flat. It's actually just down slightly, but significantly over same quarter, for prior year. So from 12.7 to a 13.6 billion. But the piece I want to call out is the data center and AI revenue. So the data center AI revenue is 5.1 billion now, with an operating margin of just over 30, so 30.5%. Solid growth overall. I think it's a 22% growth over prior year for this revenue. This is a bullish sign too for Intel. And like I said, I've been a big fan of Intel on the stock. The stock moved up, I think, to about 67 a share overall. But I'm just a big fan of their American comeback story, the American foundry story. They're being a huge part of the CHIPS Act. We've seen NVIDIA put a $5 billion investment in them. We start to see some other hyperscalers like Microsoft that is leaning and signaling that they're going to work with Intel for some of their chips and some of their ASICs that they're going to build out. So big fan of Intel overall. I think the real story for this report, though, we have to clearly say is the advanced packaging piece that they brought out and their foundry overall. So their CEO highlighted it in his comments that there is a severe constraint in advanced packaging. We did a video on this the other day. You guys know I called this piece out. I called out a few stocks specifically due to it, and I'm also going to re-mention those in this video because I think there'll be some bullish spillover to them. But overall, I think what their CEO, what Lip Bhutan said, is that TSMC's CoWoS capacity is sold out through 2026. So this does give Intel an opportunity with their EMIB to be the viable plan B for the world's AI chip assembly. So that is a massive opportunity for them. They're betting the house on the transition for where memory and logic are stacked vertically next to each other. Their revenue from their foundry, so Intel foundry revenue grew by 16% this quarter, and there was a 50% in equipment orders increase, 50% increase in equipment orders. So keep that in mind as well, because that's going to be a bullish signal for some other players as well. But as I mentioned, they are a massive player here. They're betting the house on HBM4. They're kind of moving very quickly to be a dominant player in this space overall, and their stock is moving very well because of it. But the beneficiaries from here, especially with the comments around the advanced packaging being so constrained, being a bottleneck, it's going to be the two that we talked about, Amkor and ASE. We've talked about it before. We know these are the two companies that will fill the spillover orders from Taiwan Semiconductor and Intel when they can't fulfill the orders. So Amkor Technology, and if you didn't see my earlier video, the ticker there is AMKR, and ASE Technology, ticker there is ASX. These are the companies that provide these advanced packaging services. They'll provide it to the rest of the industry. They'll provide it to the massive hyperscalers when TSMC and Intel's capacity is sold out. The other areas, because I mentioned the equipment orders, that 50% increase in equipment orders due to the demand of what we're seeing in the foundry, for particularly the 18A foundry for Intel, it's going to be a bullish sign for the picks and shovels companies overall. So we're going to think here about companies like Applied Materials, Lam Research, ASML. Those will be big beneficiaries in my mind. All right, and Intel did say that their 18A foundry is running ahead of schedule. So keep those stocks in mind. Keep them on your tickers, your watch list. If you don't have them already, I think we will see some spillover, bullish spillover from these earnings and what we saw today for Intel. But the last one I want to drive to that gives a direct correlation to Micron, the memory players overall, also give it to SanDisk, and there'll be a spillover to the storage giants, will be SK Hynix. So let's pull up SK Hynix, and you can see on the results here, a couple things I want to pull out. It's just the revenue overall. So their revenue, Q1 revenue hit 52.6 trillion won, which actually correlates to about a 36 billion US dollars. But look underneath that, 60% quarter-on-quarter growth, 198% year-over-year growth. Massive. And if you look to the left and right, the average selling prices for their DRAM were in the mid-60s, increased from mid-60s quarter-over-quarter. And NAND over here on the right, their average selling prices were in the mid-70% increases quarter-over-quarter. A couple other things I want to call out. If you look on the income statement on the left, we talked about the revenue in the first line, but if you look in the third line, the operating profit of just over 37 trillion won, that actually correlates to 25.4 billion US dollars. But look at the growth. If you look far to the right, a 400% increase year over year for operating profit. Guys, and if you look to the right, this is a company, look at that operating margin, 72%. So this is a hardware company that's hitting margins as a software company. We saw this with Micron as well. It was baffling to the analyst community, but it's being confirmed time and time again by these memory players. It's just showing the pricing power they have in the market to drive a 72% operating margin, like a 79% gross margin for the company overall. And I think I want to call out a couple more slides, just this last one, because I want to show you the growth by product. And if you look on the left-hand side of the screen, the left-hand chart over here, you'll see in the Q1 2026, 78% was driven by DRAM, 21% driven by NAND. And look at the change just in revenue growth overall. I mean, still proportionally about the same, maybe a tick higher for DRAM over NAND, you can see for this quarter versus Q4 of last year, but just a massive growth, almost a 200% year-over-year growth, and just a massive growth quarter over quarter as well. But if you look to the right, you can see where that revenue is coming from for each of these. And for DRAM, the thing I want to call out from the middle column, which is Q4 of last year into Q1, you just see the growth with the server side of it. This is the data center overall. You see that shift going there versus where we saw it for mobile, consumer, and graphics in the past. So that piece, and then we see it with NAND as well. You see the shift into the SSDs. So the enterprise customers over here were moving there versus having it in mobile overall. And that's where we're probably all feeling that squeeze in the consumer products just because of the memory that's being shifted to the AI build out, to the data center build out, being given to the hyperscalers for those applications. So you see it on the balance sheet for SK Hynix as well. But guys, that right there, what I just showed you, that to me is the biggest smoking gun that we could see for the HBM supercycle overall. You don't have to look any further than the SK Hynix Q1 results today. It was a massive print overall. They didn't just beat expectations, they smashed them. That operating profit, like I said, was a 405% increase year over year. And that 72% operating margin, that's the highest in the company's history. The other piece that the management confirmed today in their earnings, that HBM4, the demand for HBM4 will far exceed supply constraints over the next 3 years. So that maybe you will put some of the bears to bed and put their doubts to rest around just the supply crushing the demand we see in the market, with one of your biggest players, if not the biggest player, SK Hynix, says it's going to see this demand for 3 more years. This is the level of pricing power and profitability that we want to see with the customers. And when you look in this quarter, I mean, historically or traditionally, this quarter has been usually a seasonally weak quarter for memory companies. And to see this level of pricing power that we just saw today and the profitability that they just posted, this is it just gives us a huge validation that the memory sector has decoupled from the old cyclical patterns and is now a high margin engine for the AI era. These results and what we saw with Micron and other companies, and we have massive prints coming next week with Western Digital, SanDisk, Seagate overall, I think it's going to prove to us that memory has moved from a commodity to a luxury good in the market right now. And I do want to talk a little bit about the storage players before I leave, because they just continue to be on a massive run. They continue to set records every time they trade, as I mentioned. And today was no different. If you look at Western Digital and you look at Seagate, Western Digital was up, $14 overall today, up 3.5%, just over like 3.6%. And they closed the day over 400 a share, 403.12. But if you look down on the graph, you can see their 52-week high they hit today as well. They hit 416 at some point today. Seagate overall, same story. They were up a little less today. They had a massive growth over the last few days, we know, but they still put another 1.33% on the board. Guys, they hit almost $608 a share today. They broke the 600 mark overall. These guys have been moving massively. This is what I've talked about, how the storage players are really the superstars of the segment right now. They are driving the performance. So why are they moving so fast? Why are they hitting all-time high? The market is finally pricing these companies as infrastructure players, not hardware vendors. And Seagate is the same. They are arguably the strongest performer in the S&P 500 this year. I think they're up nearly 100% year to date. And we have their earnings next week. We'll see what the stocks do for both of these companies as we ramp up towards their earnings. But we know that Seagate, its nearline capacity is allocated through 2026. You literally cannot buy a top-tier storage right now because the hyperscalers have bought the entire factory output. The data lake, this is the data lake shift that we have talked about in the market. In the old days, you'd store data and forget about it. In the AI era right now, you need to store petabytes of unstructured data and have it ready for training at a moment's notice. Citibank is realizing this as well. They just raised the price targets for these companies. Seagate's price target went to $595. Western Digital's price target went to $405. The market realized that you cannot have an AI revolution without a place to put the data. They are the final leg of the AI hardware, or the holy trinity, let's call it: compute, memory, storage. I like that. Holy trinity overall: compute, memory, and storage. Storage isn't the backseat anymore. It is the fuel tank right now. And that's why we're seeing Western Digital and Seagate move the way they are. So guys, today for me, the signal was very clear. Texas Instruments proved the power demand is real. Intel proved the packaging constraint is one of the biggest bottlenecks right now we have in the market. And SK Hynix, they proved that memory margins are now in the stratosphere. And the storage titans that I just covered, they proved that the AI data lakes are now the gold mines, or one of the new gold mines in the AI demand. As we head into next week, keep your eyes on the Magnificent Seven. We have 5 of them. They're going to report their earnings next week. We have Amazon, Apple, Microsoft, Meta, and Google reporting out. We also have 3 massive memory players reporting out next week in Western Digital, Seagate, and SanDisk. How will this help the sector overall? Will we continue to see the sector drive? Thanks for watching tonight's video. Let me know your thoughts and comments below. I hope you guys enjoyed it, and I'll see you in the next one.